Welcome to Parkbench Tutors. For more information about Parkbench Tutors, look us up on parkbenchtutors.com or find us on Facebook. In this podcast, we are going to look at the business documents that are associated with credit transactions. So let's start with our case study. We're going to have Mobster and Heavy Harry, and they're going to be running a footwear store called Fairy Feet. And they make credit purchases for their shoes for sale from Twinkletoes, a company run by a Sicilian family. So, what are the documents that will pass between the two businesses? Remember, this is for a credit transaction. So we're going to start with Fairy Feet placing a purchase order for shoes with Twinkletoes. And here we can see the document that needs to be generated. To start the whole process off, we need a purchase order from Fairy Feet. You can see it shows various details, the headings, the articles required, how many are required, what the unit price is, and what they expect to pay for shipping, what they expect to pay in tax, and what that total will give. So let's just look at that. The headings on the order then say who it's from, who it's to. It's on the left hand side. Gives the sales tax rate that they expect, the date of the order, and who to contact in the event of any query. And of course, it's a purchase order and it needs a number for reference. The number here on the left hand side is 145. And there we are, the details in the order again: the quantity, the items, the unit price, and the amount, and the total amount that they expect to pay. So Twinkletoes supply the goods, and then they send an invoice to Fairy Feet. So that's our next document, and this is the important start in the process because this is the one that will be entered to the accounts, the invoice. So let's look at the headings on the invoice. We have who the invoice is from, Twinkletoes, who it's to, it's shipped to Fairy Feet, what the invoice number is, the date, and the details on the invoice. Again, it's the quantity, the item, the unit price that they've actually been charged, and the amount, the subtotal, the tax, and so on. Note that although the purchase order gave them a cost for shipping, Twinkletoes have been very kind, they've not charged them for shipping. Okay, what happens at the end of the month then? Well, at the end of the month, Twinkletoes will send a statement to Fairy Feet. So that's the next document we're interested in. The headings on the statement: who it's from, who it's to, what the date is, and what are the details. And in this case, the only thing on the statement is the unpaid invoice that they had. At the bottom of the statement, there will usually be a remittance slip, which is a tear off or a perforated part where you can send in your check or whatever for what you owe. Of course, many firms will not be paying by check, they'll do online bank transfers or something like that, but we'll go the old-fashioned way and assume that they're going to pay this amount by check. So they will then return this slip, which is called a Remittance Advice, and the Remittance Advice they will fill in with the amount that they have enclosed, which here is at the bottom. Then they've enclosed 1435.80, which is of course the full amount due. And with the Remittance Advice, the other thing that they will send will be a check for the payment. So the check will be made out to Twinkletoes. It will show the amount in words and in the number. It will give the date, and it will be signed by the appropriate person. So from the customer's viewpoint, the purchase order is sent to the supplier, an invoice is received, a statement is received, and the Remittance Advice with a check is sent back to the supplier. From the supplier's viewpoint, they receive a purchase order, they send the goods with a delivery note, they then send out an invoice to the customer, and then they will send a statement to the customer, and they will receive a Remittance Advice with a check from the customer. So that's a typical pattern with a credit purchase. But of course it may not always go that way, and sometimes returns are sent back to the supplier, in which case a credit note is obtained from the supplier to the customer. So there's a typical example of a credit note, not for the particular transaction we've just been discussing, but anyway, this is an example of a credit note, and the detail on it, it will indicate that it's a credit note, It will have a reference on it. This one is 540C. It will have a date on it, the order to which it refers, or the invoice sometimes to which it refers as well, and it indicates the description, the quantity and the description, unit price, total, etc. So here's a typical credit note then. This is a return of Casablanca stacking beakers, 250, and the amount is 370. Assuming the sales tax is 20%, right? Fill in the subtotals, the sales tax and the total. Nice little exercise there. And when you've done that, you should have got an answer of 370 for the subtotal, 74 for the tax rate, giving a total of £444. That's the end of our session on documents for a credit transaction. Thank you for watching and listening. We wish you success in your studies. This podcast was brought to you by Parkbench Tutors and narrated by David Hopcroft. For more information, look us up on Facebook, or you can find us at parkbenchtutors.com.